Hello, in this presentation we will go through the bank reconciliation process in the three accounting software including QuickBooks Online, QuickBooks Desktop, and Excel. The bank reconciliation process is a really important process and one that's often overlooked in accounting courses as well as within QuickBooks courses. The reason it's really important is because it's the second biggest internal control we can have in order to safeguard ourselves against making errors. The first most important internal control is the double entry accounting system. But both large and small companies can do the bank reconciliation process, and that's really that huge second layer of defense against making an error. And if we have the bank reconciliation in the system and we are using software that's forcing us to be in balance, such as QuickBooks, then we can have some really pretty good assurity that all the information is within the system. That's because the bank reconciliation deals with cash, and although the timing might be different than when we would recognize revenue and expenses on an accrual basis, it is something that all cycles deal with at one point or another, meaning the revenue cycle is going to, of course, deal with cash at some point, so will the payable and purchasing cycle, so will the employee cycle in terms of payroll. So therefore, because all those cycles deal with it, by checking cash, we are really checking all of those different cycles, all of the different components that we are dealing with within the system. We will go through the bank reconciliation process both in the QuickBooks systems, Online and Desktop, and Excel. When we look at the bank reconciliations within the QuickBooks system, oftentimes when we look at courses that put together this information, we really kind of shortcut the process, meaning oftentimes we don't really actually see a bank statement and compare the bank statement to what we are putting into the system. And that really makes it difficult for us to visualize what is actually happening. What we will do here is we will actually have a bank statement as we would get from the bank, and we could get that, of course, electronically, or we can print it out, but we're going to show a bank statement and then compare that to the QuickBooks system, and then we can see what's actually happened. We're going to go through and we're going to tick and tie everything off from our system to the bank statement. And then once we have gone through this process, which is not too difficult once we have done it for the first time, setting up the first bank reconciliation is a little difficult, and we'll go through that process, and we'll do the second month of bank reconciliation, which will be a little bit easier because we'll already have those beginning balances set up. Once we go through that process, QuickBooks will then generate the bank reconciliation. When we go to the Excel side, we'll actually do the same information within Excel, comparing these two items in terms of the bank statement and the books, checking off what has not been accounted for, and then creating the bank reconciliation from that. From us doing this within Excel, we'll be able to see that comparison more clearly. In other words, we'll be able to see what QuickBooks is doing when it takes that data input form that we have put into the system and uses it to create the bank reconciliation. We'll then get a better idea of what the bank reconciliation is, how to read the bank reconciliation, and why it's so important, why the bank reconciliation and the process of doing the bank reconciliation gives us so much more assurity as we go through the system. As we said earlier, we will have both the first month of operations in the bank reconciliation, which can cause some difficulties because it's the first month, setting up that beginning balance, especially if we have some information in the system prior to us first starting the system. Once we've reconciled that first month, the second month of reconciliation is typically easier within QuickBooks. So therefore, if you're starting off a bank reconciliation, if you get through that first month and you can reconcile, it should be a lot easier going forward. Within Excel, we will show that process in both months as well and show how that bank reconciliation or the process of the bank reconciliation is then being used to create the actual bank reconciliation report and then interpret what that report is telling us.